coming on stream of the AFCFTA, it became clear that for the AFCFTA, which for me is a silver bullet for the continent, which can actually help the continent achieve prosperity, it needed a payment system. So we sort of see ourselves as the gunpowder in the bullet that takes the bullet forward. So what we have done is we've asked ourselves, what are those issues with the current cross-border payments? You would see a number of issues, but one key one is the issue of speed, another is the issue of cost, the other is the issue of trust. And PAPSS has actually taken steps and has addressed each and every one of these challenges. If you look at it from a cost point of view, we have provided a low-cost alternative. If you look at it from a speed point of view, PAPSS is instant, it completes in no more than 120 seconds. If you look at it from a trust point of view, we have built by design a lot of trust into the system. Whether you look at it from the fact that we partner with central banks, the fact that we have certified the system to the highest of global standards, if you look at it from the point of view of aligning the system with the principles for financial market infrastructure. So all that we have put in place. But it takes a lot more to guarantee seamless payments across the continent. So we have looked at it from the point of view of governance. We have built a governance structure that will ensure that PAPSS will continue to run in a way that guarantees trust consistently across the continent. From a design point of view, we have built a lot into the design. We have made sure that the system is designed to support, it has the flexibility to support large and small entities, governments, businesses, and individuals. PAPSS can be engaged through digital channels, can be engaged physically at bank branches, and can support all types of transaction types. Now, from a design point of view also, we know that there are a lot of brilliant innovations across the continent. But then you look at payment as one of those impediments. We have designed PAPSS to be able to be the plumbing that will support tech solutions and financial services across the continent. So because we do not expect to be able to take all of what we have designed to the last mile all by ourselves. Then you look at KYC and compliance. That is very, very critical, and we look at it from multiple standpoints. Before any financial institution is able to join our network, they go through extensive customer due diligence. They go through our MANSA process, and then we look at things like ultimate beneficial owners and so on and so forth. But beyond that, we also have our governance, risk and compliance systems, our AML systems, our sanction screening systems, our fraud management systems. And beyond all of that, we have brought standards to payment, such that anybody across the continent is able to have a single API connection and is able to connect to all of the financial institutions on our network. The whole aim is that a small business person in any part of Africa is able to target 1 billion people, 1.4 billion people, rather than just targeting 100,000 or 1 million within your own country, or in the case of Nigeria, 200 million. You are able to actually scale and address 1.4 billion people. So those are some of the things that we have done. For us to be able to solve the problem around cash at the borders, you have to have a solution that is very close to cash. And what is cash? Cash is instant, okay? Cash is fast. If you're at the border, for example, once you just cross over, but there are so many issues. So PAPSS has been able to actually address all of those issues. Where we are now is driving adoption, and I'm happy to report that we now have 18 countries, with the latest being the current host country of the IATF, Algeria, And what we are now doing is deepening those connections to our infrastructure for the benefit of our populations. Speaking about Algeria, I wish it was a switch you can flip and then suddenly everybody can use it, but unfortunately it takes a process. Our process is when we go to a country, we first of all get the central bank to sign to be a member of PAPSS. What that does is it says that the regulator is able to regulate other participants who will connect to PAPSS from that market, okay? Then afterwards, we go through an integration exercise, an awareness sensitization, so it takes a bit of time. Algeria signed about a month ago, so we're actually going through those processes. We want to actually get to the level of adoption where customers do not need to start asking which banks are on PAPSS. So if you go to a place like Nigeria, a place like Ghana, we have as high as 90% adoption. In some countries, it's at 60%. In some countries, it's at 50%. But what we are doing is actually closing that gap such that customers do not need to ask which banks are on PAPSS. They would know, just by using any of the channels of the bank, that they can actually address 80% of the market. That's the journey we are on, but it takes a bit more effort to achieve that.
And by the way, did you say that once you make payment, how many minutes does it take to get it on the other side?
Maximum of 120 seconds, but since we went live, we've been averaging 7 seconds.
7 seconds?
Yes.
So in 7 seconds, once I pay in OGS, a counterpart in, let's say, Accra should be able to get the money within 7 seconds?
That's correct.
Good. I'm sure that should be very reassuring, but in terms of security, how do you balance that with this efficiency that we're beginning to see from your end?
Okay, and when you speak to security, it's not about just Mike saying that we are secure. There are people who participate in the ecosystem, so PAPSS needs to be able to, give confidence to each and every one of those participants. So first of all, we always say that PAPSS does not take away any powers that the central banks have. Neither does it donate any new powers, okay? So we, first of all, leverage the trust that exists with the central banks. Secondly, we employed a lot of technology, a whole lot of technology. So we have invested in a system that by design is implicitly secure, okay? And before anybody joins our network, we actually make sure that the channels between us and that person is 100% secure, okay? And we continue to test those interfaces on a regular basis. We run what is called vulnerability assessments. We run intrusion detections, penetration tests, and so on, which continue to make sure that our system is secure. Now, we have also looked at security from the point of view of that, like any other global standard payment system, our system is non-repudiatable, which means that once you attain finality, you cannot wind back those transactions. So in that way, we have aligned with global standards. We have aligned with the principles for financial market infrastructure. We constantly get ourselves reviewed by an independent third party. So we open up our systems to an independent third party for an independent review. So we've put all of these things in place. But beyond that, we also have a multilingual call center that is able to provide support to individuals and especially our partners when they use the PAPSS system, and if there are issues, our dispute management mechanism is very seamless. And I'm happy to report that we have not had any major disputes so far on the PAPSS system. Our system has been proven and certified, to be secured. PAPSS has decided to actually get itself reviewed independently and certified to be a fully secure system. So PAPSS is as secure as any system anywhere in the world can be as far as payment is concerned. Now, the last layer of protection that you can also speak about is that Afrexim Bank has decided that it needs to back that system. And what it has done is it has created a fund of about $3 billion, which is supposed to be a guarantee to make sure that settlement finality always takes place and to support this payment system. Very few payment systems anywhere in the world is able to boast of these levels of protection. So I can assure our customers that from a design point of view, from a technology point of view, from a risk and compliance point of view, from a KYC and anti-money laundering point of view, we have taken steps to make sure that we cannot be impugned in any way, anywhere in the world. PAPSS has decided to create a rail and has decided that it doesn't need to actively participate in creating the last mile solutions, because PAPSS is designed not to compete with its participants, but actually to complement them. But how have we intervened in that sense? What we've done is we've made some critical investments in technology, which is able to augment what they have, and therefore they're able to have secure technologies at an affordable cost. We do not charge banks for coming on board on PAPSS. We do not have any recurrent fees. And what we have done is to significantly cut down the cost of transactions. Now, we expect that our partners who are responsible for doing the last mile will actually pass on some of those low costs also to the consumers. So if, for example, PAPSS has cut down the cost of cross-border payments to as low as maybe 10% of what competing offerings have, then we expect that those costs will also translate to the customer. So we're also working with our partners, the regulators, to see that that also happens. That will certainly help to reduce the cost of the last mile. Speaking about fraud and money laundering, I did say that we have an AML solution, and our AML solution is state-of-the-art, if I must say so. It's able to not only just manage static rules, but it's able to manage dynamic rules. And additionally, it's able to learn from trends. And that way, it's able to pick up money laundering issues more quickly and more efficiently than most other money laundering tools. But just to say that money laundering as a word was not developed when PAPSS launched. Money laundering has been with us forever. What we have done is to invest in technology to make sure that we are able to sieve out those issues when they do occur. So as we speak today, we have a very impressive record, and we have also been able to reduce our false positives to very near zero. So we are very happy with where we are from a money laundering, a sanction screening. One thing that we may need to look at is actually to create African lists. Because today we are looking at sanction screening, and we're looking at lists, global lists, but we also want to be able to have lists from within Africa. Also one issue around currency and balance of trade. Now, those issues exist even today. What PAPSS has done is to significantly leveraging its multilateral net settlement system, reduce any impact of those third-party currencies on countries. So to give an example, what we have now done is that countries are able to do transactions and settle among themselves in their local currencies. However, where there is a difference, they are able to settle that difference in an agreed third-party currency. So this has reduced the impact from about 100% when we were settling gross to as low as 15%, so that countries can have more FX liquidity to do other things. And I keep saying, our focus is not de-dollarization. Our focus is to make sure that African countries are able to trade and settle trade among themselves in their local currencies, and therefore only leverage third-party currencies for any differences that might exist on the challenges that we face today. When you deal with 55 countries, you have a situation where they move at different paces. They have different monetary frameworks. They have different fiscal implications of everything that they adopt. So it's natural that the speed of adoption will be different across board. However, we had issues where in some regions, their understanding of PAPSS is that it cannibalizes their existing effort. And we've taken time to explain that PAPSS was not designed to cannibalize existing payment systems. And that's why in the north here, we partner with Buna. In East and Southern Africa, we partner with the Commercial Clearing House. In West Africa, we partner with a number of regional systems. What we want is seamless payments across the continent from end to end, so that even when you have a payment system, at least PAPSS is able to bring interoperability to it. And I think that we should be able to, there is room enough in Africa for multiple players to exist. However, what PAPSS is doing is bringing all these players together into a seamless whole. When you have deployed technology as far as PAPSS is concerned, PAPSS is beyond just a technology solution. There is now the advocacy for us to now begin to repeal or unwind some of the existing laws and practices which actually frustrate the use of PAPSS in some of those markets. So for example, in some markets, there are laws that say that every single trade that they do must be denominated in a particular third-party global currency. Now, even though PAPSS is available to process payments across those countries, in that particular market, you still need to do some advocacy work to ensure that we're not saying remove that third-party global currency, but we're also saying that you should include African currencies, because that's the only way we strengthen African currencies. Prepayment processing that will support things like processing LCs and so on PAPSS. What we've done, first of all, was to build the rails, and our aim is for us to attract a number of partners who can actually partner with us to create other solutions. We are currently working with a number of partners in Nigeria. We're working with partners in Ghana, who are also looking at those types of pre- and post-processing solutions which we can couple onto the PAPSS. So I would say that there's quite a bit of work in process, but what we've also done with a number of commercial banks is to integrate PAPSS into their existing trade solutions, such that those processings can happen in the way that they currently do it, and then payment can happen through PAPSS. So it's something that we never intended to innovate everything by ourselves. Basically, PAPSS has grown via partnerships, and today we're onboarding solutions around remittances, around invoicing, around escrow services, and so on, which were developed by third parties and coupled onto our system. So this is something that we're working on, and our doors are still open for new partners who can partner with us in that respect. Using solutions from Stripe and so on, and how can PAPSS help without transactions having to go outside of the continent. Actually, this is a fundamental design issue for us at PAPSS. What we've done is actually such that the payments on PAPSS do not, and I repeat, do not leave the continent. The transactions originate from a counterparty, a participant on the continent, is processed through our infrastructure, PAPSS, on the continent, and it terminates at a beneficiary on the continent. So our solution already deals with that issue, but then what we are now working on with a number of countries is to see how we can unwind some of the existing restrictions, some of the requirements for approvals. And for example, Nigeria has led the way. Nigeria recently approved that certain types of transactions and below can actually go through without any need for those cumbersome documentations and those cumbersome approvals. So we'll continue to work with all of the central banks to see how we can ease the burden, especially, when we design this solution, it's not about those large corporates. Those guys, they already know how to deal with their complicated payment requirements, but we want to make it as simple and as easy as possible for the SMEs to be able to leverage the platform that we have built. Initial model was to work with our partners in the market to drive awareness. So we've seen quite a bit of, we've seen that there are still gaps, and we continue to work with our partners, but PAPSS on its own is also going to increase the level of engagement that it has in the various markets, and I believe that we'll see those gaps closing. And then the question was also, how do we ensure that the users know what to do? And I'll tell a story to bring out what we are doing. When we started PAPSS, all the transactions were coming out of bank branches. That means you need to physically walk into a branch, fill out a form, and initiate a PAPSS payment. Of course, for branch, there's a lot of trainings. You have to train and retrain the branch staff. But immediately we put it on digital channels, on mobile. Without any training, once you put it on the mobile device, I'm telling you, without any formal intervention, you see the transactions go up by 5x. Because what you have done is you've taken this means of payment and put it where they are already comfortable. Okay? So what we are doing now is actually taking this. Tomorrow you will see them in social media channels, of course in partnership with commercial banks. You see it in the digital channels of the commercial banks. You see PAPSS now going to where the consumers are already comfortable. So if you already use, for example, your WhatsApp to make a chat, we want to make sending payment on PAPSS as easy as sending a WhatsApp message or an SMS. So we don't want to change the way the consumers work. We want to take the payments to where they are already using. The issue about micro royalties, and that's an excellent one. When we started PAPSS, we identified a number of ecosystems that we want to serve. I can't really say that I fully understand the micro royalties, but I am very, very excited about it, and I'll be happy to sit with you to understand this better. Because what PAPSS is a rail, is a plumbing. So all the use cases are available, should be able to leverage the same plumbing to meet those needs. But what we've done is to build a set of competencies that are at the heart. So we've built an instant payment system. We have built a currency marketplace that allows you to change from one currency to the other without the intervention of any third-party currency. And then we have also created a card scheme. And that card scheme means that even poor African countries can take this card scheme, brand it, call it whatever they want to call it, and be able to issue it in their market. So instead of them having to spend 20 million US, for example, on consulting, on technology, on all types of deployment, we are saying to you, we have done that expenditure, take it and use it. So those are some of the things that we are doing. The benefits of a continental payment system comes with more countries joining and more participants also being connected to the network. We think that if we are able to actually achieve 80% of the continent by next year, fully connected and leveraging this infrastructure, that we have a better shot at achieving the goals of the AFCFTA. So it's an advocacy to request that more and more of our countries connect to the PAPSS and begin to gain the benefits of the infrastructure.